Take a look at futures indicating a triple-digit gain at the start of trading this morning for the Dow Industrials, kicking off the week on the upside. Dow Industrials up 179, the S&P up 21, and the Nasdaq higher by 66. Markets looking to snap a 5-session losing streak. We are waiting on the CPI numbers. That's the Consumer Price Index report, will be out tomorrow. Import and export prices also out, plus Consumer Sentiment Index numbers as well, all due out later on in the week. We will, of course, cover all of that. Joining me now to look ahead is Federated Hermes Chief Equity Market Strategist Phil Orlando. Also joining the conversation all morning long this morning, former Assistant Secretary of the Treasury for Public Affairs, Monica Crowley. Great to see everybody this morning. Thank you so much for being here. Phil, great to talk with you as we kick off this new week. And I know you saw the story in the Journal this morning that says so many analysts are taking their estimates down, putting the warning signs out there that a correction is coming. Your thoughts?
Well, add our name to the list, Maria. Thank you very much for having me on this morning. We had our macroeconomic policy meeting at Federated Hermes last week. We took our third quarter estimate, the quarter that we're in now, down from 7.8% to 5.2%. We're concerned about the negative impact that the rising Delta variant has had, the decline in vaccination rates, the spike in inflation. All of that has had a material impact on consumer confidence, the regional Fed indices, et cetera. And we thought it was just prudent to take numbers down for this quarter or the next couple of quarters.
Yeah, I mean, I'll add to that, we've got pretty good premiums out there, right? The S&P 500 has already hit 54 records so far this year. Analysts from major firms are warning that there is a real possibility of a pullback on weaker earnings, Phil. So let me get your take on the earnings picture, the backdrop in terms of the economic support for this market. Has something changed?
Well, not that anything's changed, Maria. Second quarter GDP growth and corporate earnings was phenomenal. S&P earnings were up 90% year on year. 85% of the companies beat by an average of 16%. That's the fifth consecutive quarter of really strong surprises. As we look at the landscape, literally across the valley at the horizon here, we think that this could be the last really strong quarter and that we start to see a deceleration of growth. Not that we're going to go negative, but the pace of growth is going to start to slow, the so-called second derivative. And I'm not sure if the market has fully priced that in. So when you look at the combination of peak growth, ongoing concerns about the coronavirus, we've got this debt ceiling issue, questions about the Federal Reserve, questions about fiscal policy in Washington. We just thought that with the stock market sitting here at, all-time record highs, it's prudent to take a couple of chips off the table and expect that maybe we hit a 5 or 10% air pocket over the next couple of months. And it's just prudent to be a little more defensive here.
Well, the prudence sounds wise, especially since we don't know what's coming down the pike, right? In terms of new policy, House Democrats are set to propose raising the corporate tax rate from 21% to 26.5%. They want to impose that 3 percentage point surtax on income for people making more than $5 million, and then they're going to raise the top individual rate, raise the capital gains tax rate as well. Look, we're still talking about a capital gains tax rate of 43.4% on the highest earners, Phil. Before you tell me what impact it's going to have on the markets, let me bring Monica Crowley in. Monica, do you think this is going to pass? These increases would be part of the Democrats' plan to pay for that massive $3.5 trillion spending plan, Monica. Does this go through?
Well, I think, Maria, because of the whole array of crises committed by the Biden administration, from Afghanistan to the wide open border to the surge in crime, you're seeing President Biden's job approval numbers crater. When you have a relatively weak president, members of his own party tend to stray and tend not to go along with what the administration wants. So my sense is that even though the Democrats have these majorities, they're very narrow, and without the political blocking provided by a strong president, it seems to me that you're going to see more and more Democrats flake off here as Manchin is staking his stake into the ground here on tax increases and the overall spending package.
Yeah, that's great analysis. So, Phil, what does that mean from your standpoint? I mean, look, these numbers are already lower than I think what the Biden administration wants. You know, he wanted a corporate tax rate of 28%. House Democrats are proposing 26.5%. What's your take on whether or not this goes through, and if it does, impact on investing?
So I think Monica made a great point, and I might phrase it a little bit differently, in that it's our view that President Biden's political capital right now is hemorrhaging. And so if we were having this discussion a week ago, what the Democrats were proposing was an increase in the corporate tax to 28% federal, 32% statutory. That would put the United States as having the highest corporate tax rates in the world, and in our view, would reintroduce the inversion problem that we had during the Obama administration. It's interesting that what we saw over the weekend, I think, is a first step back towards the middle. And I think that process is going to continue. As we look at the split between the hard infrastructure program, $1.2 billion, which is bipartisan, I think we're in better shape there. But this human infrastructure package, the $5.5 trillion package, I think there are problems, and we're going to see a lot more negotiating on that over the course of the next month or so.
Yeah, I love that they came up with this name, human infrastructure, which frankly I think is ridiculous. It's childcare, it's money for a green economy. You know, I mean, it's money for education. It's just a spending plan. Bottom line, and I agree with you, Phil, I don't know that it goes through either with all of this pushback and issues elsewhere. Phil, bottom line, how do you allocate capital at this point? You're taking your estimates down. We're looking at an uncertain fourth quarter. Should I be raising cash levels here?
Well, we took a percentage out of our equity overweight last week. We're now down to a 5% equity overweight. We're still focused on the sectors of the market that are cheaper: domestic value stocks, small cap stocks, international stocks. Again, we think there could be a 5 or 10% air pocket over the next couple of months. That, I think, would be a more attractive point to put some money to work.
Yep. Phil, it's great to see you this morning. Thanks very much.
Thank you, Maria.
Have a great week with you. Phil Orlando joining us, Federated Hermes.